Hey gang, here's my mortgage rate weekly update for the week ending December 5th, 2025. On the jobs front, ADP reported that private companies lost 32,000 jobs in November, even though experts expected a small gain. Over the past 4 months, private sector has lost 17,000 jobs in total. ADP's chief economist called the jobs market choppy, pointing to cautious consumers, an uncertain economy, and weakness among small businesses. Other jobs data confirms the slowdown. More people staying on unemployment, more layoff announcements, and hiring plans at their weakest since 2015. Overall, the jobs market is clearly cooling. There is some bright housing news to share. Cotality said home prices are expected to rise 4.3% next year, and rents are down 1.1% from last year, marking 2.5 years of year-over-year rent declines. On inflation, we finally got the delayed September PCE report. Core PCE, the Fed's preferred inflation gauge, dipped slightly from 2.9 to 2.8%, a bit better than expected. Last week also marked the end of the Fed's 3.5 year quantitative tightening program. In simple terms, they'll now start buying more treasury bonds as old ones mature, something that should help push mortgage rates lower. Looking ahead, next week's Fed meeting is a big one. Wall Street's pricing in an 85% chance of a rate cut, but Chair Powell has recently hinted he may not want to cut. And things could get even more interesting with the news that President Trump has decided on Powell's replacement next May to be shared in January. Equities continued their comeback, with all three major indices now within about 1% of their all-time highs. As for mortgage rates, not much change this past week. A small win after a bond sell-off triggered by the Bank of Japan's surprise rate hike. We're still seeing 30-year conventional rates in the low 6% range, with FHA and VA rates in the mid-5s. If you're thinking about buying, refinancing, or reviewing your options, I'm here to help. Send me a message. Have a great weekend.